Donald Trump's looming trade war with China will intensify this week, with the U.S. president expected to unveil a list of Chinese goods targeted by new tariffs. Beijing retaliated today to the Trump administration's decision to raise duties on steel and aluminum imports. The White House has also unveiled measures to slap tariffs on $60 billion (£42.8 billion) of Chinese imports. China imposed tariffs of up to 25% on 128 U.S. imports today, including pork and wine, saying it had made the decision to safeguard its interests and the losses caused by Trump's higher tariffs. The move will affect $3 billion of U.S. imports. Read more. China hits back at the White House with tariffs on U.S. imports. In a statement, White House spokesperson Lindsay Walters said, China's subsidization and continued overcapacity is the root cause of the steel crises. Instead of targeting fairly traded U.S. exports, China needs to stop its unfair trading practices which are harming U.S. national security and distorting global markets. Kathy Bastianchuk, chief U.S. financial economist at Oxford Economics, said that China had not yet targeted the most substantial U.S. exports such as soybeans and automobiles, because Beijing needed to be restrained. I think they have to avoid looking weak. They will retaliate in some measures, she said. So it's quite small. The real risk is if it escalated. Read more. U.S. tariffs on China show decline of American power. It is a step in a worrying direction, because it is going against the tide of globalization. Ben Robinson, senior economist at the Official Monetary and Financial Institutions Forum, said further escalation would be deeply damaging to both sides. These are politically very important moves, but there's not really an economic consequence yet, he said. China is saying, watch out with what you're doing, because we can hurt you in a similar way. It's trying to find a way through this without anyone losing face. Read more. Trump's protectionism poses significant risk to global growth, says Bo. Trump will unveil a list of Chinese imports that will be targeted with tariffs by Friday, in a move designed to hit out at Beijing for rules surrounding U.S. intellectual property. Trump's tariffs are expected to single out Chinese technology imports. The U.S. Trade Representative's office has criticized the Chinese government's policies, saying they demand the uneconomic transfer of intellectual property to Chinese firms. The U.S. has alleged that China tries to appropriate its intellectual property through joint venture requirements, takeovers of U.S. firms, and theft. The Bank of England has warned that Trump's protectionist policies are a risk to growth both in the U.S. and more widely. According to minutes from its meeting on the 12th of March, the bank's Financial Policy Committee said the potential for an increase in trade barriers represented a significant downside risk to growth both in the United States and globally. Read more. Trump confirms $50 billion tariffs aimed at China.